Good morning, Wall Street winners. It is April the 9th, a Tuesday, and we are pre-market at about 7:47 a.m. And if we look at what's going on in the futures in our Bloomberg app, what we'll see is that we're pretty much even. The S&P and NASDAQ are in the green, not huge. The NASDAQ's up 27 points pre-market. The Dow's down 11 points and the S&P's up 2.7. So we're pretty much flat to where we finished yesterday. But it was red earlier this morning and it's turned green in 2 out of the 3, obviously not counting the UK. So 2 out of the 3 North American exchanges and the futures for those. So it's looking like it's trending positive, which is a good thing. Today is going to be an interesting day because our news really starts to come out tomorrow. And by news, what I'm talking about is the CPI data. So we're really on hold waiting for CPI information tomorrow. I believe it comes out at 8:30 a.m. Eastern time. So what we see is the 1 month out volatility index, the VIX, is at 1532. It's probably the highest it's been in the last month. If we look at that and drill into that, it's around near its 1 month high anyway, in this April timeframe. So that's just something to be aware of, showing that there is a little bit more concern, not huge, but there is a little bit more concern there. Back obviously 6 months ago in October, it was much higher. It was a little higher at 17.7. Or up into the 21s, I guess, there in the green area. So yeah, 21.7, correction there. But going back to where we are today, really sitting on and waiting on that CPI data. We can see that crude was up earlier today. It's then went to even. Now it's down a little, so it's fluctuating. But that CPI data is going to tell us a couple of things. First, it's going to tell us whether inflation is coming down or potentially coming down. It's another data point. It's not really going to tell us anything directly, but that in combination with the other CPI prints on a monthly basis will give us an indication of direction. So we're hoping for that to come down, at least the Fed is, and many people are as well, because things have gotten quite expensive with inflation. And with that, if it comes down, then there is an increased likelihood of the Fed cutting interest rates this year. And then the size of those rates comes into question, which really hasn't been something that's been talked about at length, at least at this point, because we're still waiting to see whether we're even going to get cuts. What we're concerned about is if the CPI data shows an increase, because if it shows an increase, there's a likelihood that there will be a delay to rate cuts. The size of those rate cuts may be decreased, and there is the potential of a rate increase on the table if inflation comes in hotter than expected and continues to trend up, because that's how the Fed is fighting inflation, is by raising interest rates, or at least at this point having raised interest rates, now keeping them at where they've raised them to. So by raising interest rates, it puts a strain on, the idea is to put a strain on everything and everybody and try to get consumer spending to drop back a little bit. That obviously hurts retailers, and we've seen that in the retail segment with Lulu off of some of its highs and Walmart down off of some of its highs, Dollar General. There are segments, obviously, of retail like Dollar General, Dollar Tree, those low-cost consumer retail areas that have seen an increase. Walmart probably included in that bucket. And then there's probably also somewhat of a benefit to home retailers like Lowe's and Home Depot, where people are trying to do things themselves as opposed to hire contractors to save a little bit of money. It's all about where income or disposable income is being deployed that will really help to determine what sectors are going to benefit moving forward. So as we move through this list, I think Oil is one of the things that has obviously, we've been watching that, it's obviously been going up significantly over the last 3 months. This has put a fairly big impact on consumer spending as well, because most consumers are still consuming oil in one way or another, whether it's through the food and merchandise that you purchase, because most of it is delivered through oil combustion engines, gas combustion engines, in getting that delivered to stores, and then even consumers with combustion engine vehicles that are, most of them still not converted to EVs, driving gas cars and going places, whether it's on trips, vacations to work, to the grocery store for errands, etc. It's driving that gas consumption. And then as manufacturing picks up, it's also a consumer of crude and gas. So all of that tie in, and then you add to that the wars and the conflict in the Middle East, the Red Sea attacks of the ships, and that all, especially in that oil-centric area, adds to the cost being driven up of oil. So what we're seeing is a good time, or has been a good time, to invest in these oil companies. And it still seems like it's a good time to have some of your portfolio there. We've seen yesterday a lot of fluctuation in Valero. So we can't see it here, it's already gone, but you can see it here on the chart. So Valero opened near its close, then dropped significantly, climbed back, got back to basically its close a little higher, and then fell off at the end of the day, as did a lot of oil stocks. So you can see that a lot of them trickled down during at the end of the day there, maybe at the 3:30 mark in terms of the timeline. So today, if you had bought some yesterday, it looks like you could get a bit of a pop on in the morning, and you might see a continued increase. We'll see what happens there. Crude is, again, it's off a little bit, but not significant going into the morning session. Then we get down to tech. So we've seen a lot of movement in tech. Tech sold off Thursday with the interest rate announcement from, or discussion, really not announcement, but comment from Neil Kashkari of, I believe, the Minnesota Fed, saying that there's a potential that no rate cuts happen this year, and that caused these to fall. What I find is going to be interesting this week is what's going to happen to financials tomorrow. So I'm a little leery of holding any financials going into tomorrow, and the reason for that is if inflation, if the CPI print comes in as we're hoping for, which is pointing in a inflation going lower direction, then there's a likelihood for interest rate cuts. And interest rate cuts will typically help tech stocks, but they don't necessarily help financial stocks. So we could see, and I kind of expect to see, a pullback tomorrow in financial stocks, especially heading into JP Morgan and Wells Fargo, not Bank of America, but Wells Fargo, and some of the other financial announcements and earnings announcements coming out on Friday. I do expect the earnings announcements to be positive, particularly for JP Morgan, but I do expect a pullback in JP Morgan tomorrow, going into the start of the day after the CPI information comes out. Now, I could be completely wrong, and I have no idea what the CPI information is going to be, but that's kind of how I'm expecting to play this. And if I do see a drop, I will probably look to buy in tomorrow to JP Morgan and maybe Citi, who announces on Friday, depending on how they go. And if there's a pullback there, as well as potentially Wells Fargo. So I'll keep an eye on all of those. I'll also look at the ones that I'm tracking. So I've bought in and sold out yesterday of SoFi because it was up almost 4%. I think there's a potential for a pullback in this as well, and I would grab some more of that on a pullback. And wait for that to occur. And then I think as well, if we do see a pullback in the big names like JP Morgan, Goldman, Morgan Stanley, we'll also see a pullback in some of the regionals. And we'll see whether that regional pullback is even bigger than the pullback in some of the big names. So that's kind of what I'm looking out for today and tomorrow, is to see how those things move. What we have seen in tech is semiconductors have kind of lost a little bit of steam. They're just not moving upwards in the same volume, I guess, as they have in the past, but that's to be expected. The nice thing about them is they're not pulling back significantly either. So they're still set up to move forward with good earnings and move forward probably significantly with more good earnings reports coming out of Q2. But they haven't pulled back to the extent that a lot of people, I think, were expecting. Google seems to be making a bit of a comeback here. So again, a really strong play and a good long-term hold. Meta fell back $8 or $10. I think it's going to continue to climb, but I would expect a further pullback in some tech. I'm expecting a pullback tomorrow in general in the market. And so I'm kind of holding off and trying to stay in a good cash position to allow for a purchase in if things do start to correct a little bit and become more attractive from a price point. So that's where we are today. Good luck with your trades. I hope you're liking these videos. And if there's something you'd like to see or hear about, let me know in the comments.